Good morning, good afternoon, good day. Welcome to my weekly market roundup 26 June 2021. I'm Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I developed. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live stock and market analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I use the Q add-ons for my trading analysis. They run on TradeStation and Metastock platforms. That was the last slide. Let's continue with the live system. As usual, starting with a look at the global market, starting with Australian index. Australian market ended in an indecisive manner in the weekly chart. The backdrop color is bearish, the shape is indecisive. In the daily, when price displayed the bearish headwind, indecision at the top, and it was already above upper boundary, I suggested not buying new long positions. That was useful because, as we would expect from above upper boundary, from a level where indecision came, bearish headwind came, as we would expect, price pulled back to value area, and then it stabilized there. It has a trend line support below Friday's price. Because the weekly backdrop is bearish, I am not going to look for long trades now, and because there is a trend line support, I am not going to look for short trades either. Next, Japanese index topics. Once again, the trend line support worked very well. In the weekly, price came down. In fact, it had a huge gap down move. And where did it stop? It stopped right at the pre-existing weekly trend line support. And from there, price recovered nicely. That is why when price is near trend line support, I don't look for short trends. These trend lines, automatically drawn smart trend lines called memory lines, are very effective in projecting support as well as resistance. Currently in the daily, price is inside a triangle pattern bound by resistance trend line and support trend line. Price is close to the upper edge of this triangle pattern. When price is near the upper edge of a sideways move, as is in the triangle pattern, I am going to look for a short setup. If price can touch, or even better, cross above the trend line resistance and tilts down, creating a false upside breakout, I am going to look for a short setup at that time. Currently, there is no trade setup in topics. China market, CSI 300. Yet another example where the trend line support worked beautifully. Price came down to the multiple trend line supports in both daily and weekly and nicely went up from there. If you remember my prior YouTube live session, when price came down to the trend line support, I mentioned that if it goes up from there, we are going to take long positions. that hypothesis worked very well. Price has nicely bounced up from the trend line support, and if you took fundamentally strong stock long positions at the bounce point, you would have covered risk distance by Friday's close. That was an example of bounce setup relying on the index itself bouncing up from trendline support. Next is Footsie Index UK market. This is another case where I mentioned that if price can go up from the trendline support, we may look for long positions. And if you did that by Friday's close, individual stock long positions would have hit the profit target, that is covered the risk distance. Currently it has already gone up somewhat from the recent low, so I am not going to look for a long trade now, though it is looking bullish both in weekly and daily. And lastly, India's Nifty 50 index. It was the strongest of the global markets, and that is continuing. Created a new all-time high, I think, on a closing basis, or very close to the previous all-time high that might have been created 2 weeks ago. The weekly shape and color both are bullish. In the daily, we have a trend line resistance near Friday's close. If price can break out of that resistance, then you may look for long positions in individual fundamentally strong stocks. On the other hand, if price reverses from the trend line resistance, are we going to short? No, because there is a trend line support very close to the price. If it comes down, it would be very close to the trend line support, and we are not going to short when support is so close by. The only possible low risk trade direction is to the upside if it breaks out of the trend line resistance next week. What do we see from the global markets? All the markets are in an uptrend now, or maybe in a sideways market for short-term trading purposes, like in case of Nifty, where the price is inside a triangle pattern. However, none of the markets are in a downtrend, and this is same conclusion that we reached in the previous webinar also. In this market, it may be difficult to look for shorting opportunities. Let's see if the same conclusion holds in the USA market. For the USA market, let's use Q Elite on TradeStation. I keep on switching between TradeStation and Metastock to use these two Q programs. Remember, it may look lucky now, but it was not just luck that I exited most of my short positions right on this day, previous Friday, and I mentioned that at that time before knowing how the market would move from there. Was it only luck that I exited at the perfect point all my short positions, most of my short positions? I don't think so, because I completed the comprehensive Q analysis using unambiguous signals that helped me exit the short positions. What a great decision, because if I didn't, probably 80% of those short positions, instead of closing with a good profit, would be in a loss by now. But I did exit the positions as I mentioned, and from there SPY went straight up and made a new all-time high. Now, what to do? The weekly has turned bullish, daily has turned bullish as well. There is no way to short. Am I going to buy stocks now? Possible, but not looking at the SPY chart. The SPY is already far above the recent low. I'm not going to buy an instrument like SPY now. However, there are individual stocks that are at swing low, just like SPY was at this point. And those stocks may be in industries that are starting to go up. I may look for buy setups in those stocks, not in an instrument that has a chart pattern like SPY. But SPY is certainly bullish. Let's look at QQQ. Made a new all-time high this week, bullish in color and shape in weekly. Daily has many trend line supports, so I am not going to short QQQ. It is above upper boundary. It has a long bullish run from where, right from the day when, again in a live YouTube session, I suggested buying QQQ, and I also mentioned QQQ was the only market ETF that was giving a proper Q buy setup at that time. What was that setup? That was go with flow, trend following long trade setup, and that trend following long setup worked beautifully. You could exit partial position along the way when the risk distance was covered, which happened near the upper boundary, and you could continue to hold remaining position. There would not be any reason to exit full position because it has robust trend line support in the daily. Bullish, but too far above recent low, too far from the recent previous go with flow long setup to take a new long position. What about Dia? I exited my Dia short position on previous Friday. As I mentioned at that time, that was a good idea because from there price has gone up. Weekly is bullish in color and shape. However, it is clearly weaker relative to SPY and QQQ because it did not make a new all-time high. Currently, it is still having a lower high. Therefore, if price can come down from the trendline resistance, I may look for a short setup. Remember, my previous short was using the exact same technique on this day. When I used the daily trendline resistance to short Dia, but I shorted it using intraday precision entry or fine-tune chart. I may attempt the same next week if Dia can reverse from the trendline resistance. When I use fine-tuned precision entry chart to trade the market ETFs, even if I am trading Dia, I keep an eye on the other market ETFs as well. If all the other three market ETFs, SPY, QQQ, IWM, are strongly bullish, I may avoid shorting Dia even if it reverses from the trendline resistance because such reversal may be temporary. It may go back up if the other market ETFs continue to remain strong. That is why I keep an eye on all the market ETFs on a separate monitor. If the other market ETFs are also weak and Dia is reversing from trendline resistance next week, I may not mind shorting it using fine-tuned chart. The risk could be very narrow in that case. Currently, I will not buy Dia because of the trendline resistance, and I will not short it unless I see it coming down from trendline resistance. IWM stronger than Dia because it is not in a downtrend. weaker than SPYQQQ because it is not in an uptrend either. It is inside a box. The range of the box is wide enough to try a short trade at the upper edge where it is now. Also, Friday displayed an indecision indicator at the top. Now, if price comes down from the watermark resistance, I may also look for a short setup in IWM. Now, which one to short if both IWM and dia starts to reverse from respective resistances? IWM from watermark resistance and dia from trendline resistance. Then I will short that one which one is looking weaker on precision entry or fine tune chart. And how to assess which one is weaker on fine tune chart? That is not based on the percentage down move during the opening hours of the market, not based on the percentage up or down move, but based on how the prices are moving relative to the fine-tuned pivot levels. That is how I decide which one is weaker, not based on which one is stronger or weaker in terms of percentage move. It is based on how the price is moving relative to the intraday pivot levels. Both IWM and dia may give low risk shorting opportunity using fine tune chart if the market starts to come down next week. That's a big if. There is no indication of market weakness at the current time, except that it is at a very high price level. It may be due for a pullback. But there is no sign of weakness, not only from the market ETFs that we saw so far, not only from the global markets, but probably from the other market level analysis we'll carry out just now. And the more you do this kind of structured, systematic, step-by-step analysis, the more it becomes second nature to you, the more you are able to take decisions confidently. Doesn't mean you are going to win 100% of your trades, but you will have enough success rate to make a reasonable income from the market in terms of percentage return. And when I say in terms of percentage return, I don't even talk about using options to use leverage, not using portfolio margin, but just using simple stocks. You may earn a decent percentage return year after year, quarter after quarter. And the live sessions I conduct, like this one, like the Wednesday session, and the posts I share regularly on my website, they are probably a testament to that. You may check those out yourself to see if that is possible for your own account. And if you are not getting a reasonable return on an annualized basis, you may ask yourself, what is the reason? The reason may not be in the market, but reason may be in the way you are analyzing the market and actually executing your trades. Market is looking bullish from the ETF's perspective. Let's look at Q Edge now, the sector industry rotation analysis tool that also has the bucket analysis. If you took all the S&P 1500 stocks, calculated their normal range based on Bollinger Bands or standard deviation, divided the normal range into 10 buckets. For each stock, the range will be different. You drop each stock in bucket 1 if it is at the lowest bucket of the normal range. Drop them in bucket 10 if it is in the highest bucket of the normal range, so on and so forth. You will distribute the stocks into one of 10 buckets. If a stock is above the normal range, you will drop them in the 11th bucket greater than 10. If a stock is below the normal range, you will drop them in the 12th bucket less than 0. Then you will calculate the percentage of stocks in each bucket and come with this histogram. It's called bucket analysis. It is showing the one day versus the previous day. One day histogram is in the bright colors and the previous day's histogram is in the lighter colors. How to use the bucket analysis? One way is to see if the percentage of stocks in the uppermost bucket, most extreme, you may say overbought bucket, and this is in aggregate market level picture, not for a particular stock but for all the stocks in S&P 1500 in aggregate. If that overbought percentage is somewhere around 30-40%, then it is time for the market to pull back. Where is it now? Just 7.6%. So it has long way to go before hitting that overbought level. Another way to see if the market is due for a pullback is to see whether it has spent too much fuel in going up in one day. How do we see that? We see that if the percentage of stocks in the uppermost bucket goes up by 10%, 15% or more in a single day. How was it on Friday? It went up from 2.7% to 7.6%, about 5% move, nowhere close to the 10% threshold. So we are not expecting a pullback from both angles, neither from whether it spent too much fuel in going up in one day, nor from whether it has gone up too much already that it is time for a pullback. Not at an extreme at all. If you look at the pie charts, you see that 51% of stocks are below the midline of the buckets and the 49% of stocks are above the midline of the buckets. That shows as a whole the market is neutral at present. It's neither bullish nor bearish. And how did it reach this neutral state? It was weak just a week earlier, but now it is neutral. How did it reach there? It reached there by improving the strength of the sectors, industries and stocks during the week. And let's look at that using the sector industry stock advanced decline market breadth from 1 month period to 1 day period. Earlier, just 1 week ago, all these pie charts were predominantly red and even 1 month period was balanced or maybe slightly red in some categories, industry or stock, more red than green. And now in just 1 week it has turned green except for the 10-day period. 1, 2 and 5 days are clearly green. That shows a strong bullish move throughout the week. And we saw that in market ETFs also. SPY QQQ went straight up, made new all-time highs. IWM DIA also went up but stopped at their respective resistance levels. The week was very strong, shown by these 3 pie charts. The sector advanced decline, industry advanced decline, stock advanced decline is now bullish. Next, let's look at the technical breadth. Technical breadth is assessed by looking at the bearish and bullish Q signals in aggregate across thousands of stocks. And I ran this finder on more than 2,500 stocks. Liquid stocks and S&P 1500 stocks. It has a very nice balance between small cap, mid cap, large cap and liquid stocks. The weekly technical breadth is bullish. In fact, a bit too bullish probably, considering the fact that just 1 week ago it was weak. Now 88% of all technical signals across thousands of stocks, market view, aggregate market view, but using technical breadth, 88% of all signals, almost 90% bullish. Strength signals, 84% bullish. Trend continuation, 88%, almost 90% bullish. Trend reversal, more than 90% bullish. This is bullish, no doubt, maybe a bit too bullish. Later on, we'll see at individual stock level, there are still plenty of Q360-degree trades. What are Q360-degree trades? That are in strong industries with great fundamentals and giving a low risk buy point. In aggregate, the market level looks overbought, but at individual stock level, there are probably plenty of buy setups. And why is that happening? That is happening because of industry sector rotation. How do we identify that? We identify that using a few mouse clicks in 100% real time using QH. We'll do that today. We'll look for buying opportunities that are presenting themselves today. Quite easily you could look for them. The weekly technical breadth is strong. What about Friday's breadth? If you remember the market ETF's picture, did you see something that might give you a cause for concern? There were few things that could give you a cause for concern. Not bearish, but just cause for concern. What were they? The more you study the market, more you are able to articulate the possible risks. What were the possible risks? They were that both IWM and DIA stopped right at their resistance levels. And if you noticed, IWM had an indecision at the top signal. That was also a cause for concern. Did that cause for concern reflect in the daily technical breadth? Let's see. Friday's technical breadth, all signals 69% bullish, strength 85% bullish, trend continuation 76% bullish, and the cause for concern is here. Reversal 64% bearish, more bearish than bullish. And when we combine the strong strength with equally strong reversal, together they become bearish. Of course, the strength is from a large number of gap ups. When we have large number of gap ups associated with a large number of reversals, that is a cause for concern. And in all these analysis, we are looking for what we expect and also what we don't expect. When I see something that I don't expect, then that is a cause for concern. And so far, in all these analysis, the cause for concern is only one so far. Okay, two maybe. One is the IWM, DIA are at resistances. And the second one, probably a bigger concern, is that on Friday, in terms of technical breadth, we have large number of gap ups associated with large number of reversals. That is a market signal, not individual stock level signal, but a cause for concern. And another cause for concern, as I always say, when you see large percentage of bullish signals are coming from stocks that are already at pendulum or price extreme high, as was true on Friday. 53% of the bullish signals came from pendulum high, and pendulum high or price extreme high is a terminology to indicate whether the stocks are already at very high price levels relative to their historical moves. And when More bullish signals come from stocks that are already at price extreme high. That is also a market level overbought indication. So we have three concerns so far. Two ETFs are at resistances. One is we have large number of gap ups associated with large number of reversals, and we have too many bullish signals from stocks that are already at price extreme high. That is why I will be reluctant to buy stocks that are showing patterns like SPY QQQ. But as I mentioned, there are stocks due to industry rotation that are at a lower price level and fundamentally strong. We'll find out some of them. Before we do that, let's look at the extremely powerful, with capital E I may say, the market internal study. That is another place from where we may look for something abnormal that may not come out from the market moves. First, let's look at the mega cap top 20. As I mentioned in the previous webinar also, mega cap top 20 is looking very similar to QQQ. QQQ is heavily influenced by the mega cap tech stocks, and mega cap top 20 in the USA market has mostly tech stocks. There are few non-tech stocks as well, maybe some comms sector stocks, some banking stocks, but mega cap top 20 is largely tech stocks in the USA market. There are causes for concern: bearish headwind, indecision at the top, bear release. However, when there are trendline supports, so many of them, we are not at all going to take short trades. It is overbought, it is near upper boundary, we are not going to buy also. Bullish but overbought, not able to buy, not able to short. Now let's look at the composite indices. Nasdaq composite on the left, NYSE composite on the right, starting with the daily intervals first. When the yellow line, the percentage of stocks above 50 MA for Nasdaq crossed above its average line, the dotted line, that time in live session I mentioned that the relative weakness of Nasdaq was going away. That was very useful because right from there QQQ went up, made new all-time high. It became the strongest of the market ETFs. Then it came back to the average line and went up from there. It's like creating a higher low for individual stocks, but this is a market breadth level indicator. Nasdaq level, percentage of stocks above 50 MA in aggregate. You could start to look for buy setups right at that point also. Now it has gone up. Where is the percentage? It's around 55% level for the yellow line. The percentage of stocks above 200 MA, percentage of stocks were 50 MA above 200 MA, the orange line and white lines, they are also hovering near the same 55 to 60% level. Bullish, but not strongly bullish, which would be true if they were near the 80% level. What about NYSE? It is below the average line, went up but could not regain the average line. So relatively from this angle, yellow line, percentage of stocks above 50 MA angle, now NYSE is weaker than Nasdaq. They have reversed their roles. However, in terms of absolute percentage, it is near the same level. maybe in fact a little bit better, around 60% level. For Nasdaq, it is around 55% level. The current trend is bullish, more bullish for Nasdaq above average line for yellow line. Current trend for yellow line in NYSE below average line, but in absolute percentage NYSE is stronger because it was much stronger earlier. And the white and orange lines are at an even higher level, around 75% level. So in absolute terms, NYSE is still stronger, but the immediate current trend shows Nasdaq had recovered a lot of ground. They are both bullish. However, if you see the previous peak from where it dropped when the market started weakening, QQQ SPY made new all-time highs, but the yellow lines could not make new high. It is below the previous peak. Extremely valuable insight from these market breadth studies, showing under the hood market remains weaker than it was before. More to come. Let's look at the very useful 3-month new high low. This olive color zigzag line plotted on top of the candles, and here the candles are for QQQ and SPY, though the internals, the breadth studies are for Nasdaq and NYSE as a whole. Therefore, the 3-month new high low is also for Nasdaq as a whole and NYSE as a whole, not for QQQ and SPY. What do we see from there? Few things to note. When the market was weak, 3-month new high low. What actually is that? That is, if you took all the stocks in Nasdaq, see how many stocks are making new 3-month high. Then you take all the stocks, count all the stocks that are making new 3-month low. Will they sum together to the total Nasdaq stocks? No, because a large number of stocks will neither make new 3-month high nor make new 3-month low. So what does it show? 3-month new high low. It just shows the balance between the stocks making new highs and new lows, new 3-month highs and lows, and calculate it as a percentage. How to use it? Several ways. When the 3-month new high low hits a new peak, if it goes to the extreme level, after making a low in the market, if 3-month new high low hits the extreme high level, that is very bullish after making a new low. On the other hand, if the market is hitting new high and 3-month new high low hits new high, that is a possible sign of irrational exuberance. Now we are not coming out from a new low, we are near all-time high or at all-time high. And there, if the 3-month new high low is also at the extreme level, that may be a sign of, again, market level being overbought. It is nearing that extreme level now, so another reason for concern. By the way, these dots on the 3-month new high low, they indicate when the percentage change in one day is greater than 20%. If it is greater than 20% to the downside, and percentage of what? Percentage of stocks making new high versus new low. The 3-month new high low calculation, it's actually a percentage calculation. When that percentage drops by more than 20% in a day, that shows heavy bearish day, red dot, and If it moves up by more than 20% in a day, that is strongly bullish, that shows up as green dots. How to use it? Again, if these red dots are coming after market has dropped, then it may be time for a reversal. If the green dots are coming at the market top, then it may be time for a downward reversal. On the other hand, if the green dots are coming after a pullback, like was in this case, if the green dot is coming after a pullback, then we expect the bullish move to continue. If the red dot is coming at the bottom, we expect a reversal. It's again an overbought, oversold indicator using 3-month new high low market breadth level indicator. Currently at the right edge, we don't have any such indication from the 3-month new high low dots. Also in this plot, the cyan colors are eurekas. If eurekas come after a pullback, like here for Nasdaq, then we may look for buy setups. If eurekas come at the market top, that may be a sign of irrational exuberance. At the right edge, we have no eurekas. Phoenix would have come in magenta color. Phoenix is also not there. Hindenburgs would also show up as skull signals at the top. Hindenburgs are calculations that can be done on Nasdaq NYSE separately. Nasdaq Hindenburgs would appear on the Nasdaq market breadth. NYSE Hindenburgs would appear on the NYSE market breadth. Those are not coming now, so no alert from there. Accumulation distribution on the Nasdaq NYSE would have come as up arrow accumulation, down arrow distribution, down arrow distribution. At the right edge, we don't have accumulation distribution. So at the right edge, though QQQ SPY made new all-time highs this week, there are not signs of weakness. However, the yellow lines are showing that though market recovered, it didn't recover to the previous level. And there is another concern, and for that we have to switch to the weekly interval. Some of these market breadth studies, the MA calculations, are best studied on daily interval. Of course, the Eureka, the market breadth, accumulation distribution, up arrow, down arrows, the 3-month new high low bullish bearish extreme or strong bullish bearish moves by the dots, they are studied based on daily interval, whereas advanced decline up down volume new high low is best studied on weekly interval. So I'm going to change it to weekly interval, and here we also see the weakness. Though SPY QQQ made new all-time highs, advanced decline, the most useful of the market internals indications, came nowhere close to the previous peak, showing, in other words, bearish divergence. The bearish divergences would show up in advanced decline first. Next most useful in recent weeks, months, quarters is up down volume. The least useful is new high low, that is taking too long in the current market situation to change. The divergence is most apparent, and for bigger players impossible to hide, is the advanced decline bearish divergence in weekly interval, and that is showing clear bearish divergence. Up down volume is also showing clear bearish divergence, and therefore if you are thinking that market is making new all-time high, it is everything rosy, it isn't. And this is one plot, the advanced decline divergence, up down divergence, that is clearly telling that the market is not as strong as it appears from the market ETFs. One more reason to be cautious on the market. And now let's look at the single plot that tells us a lot of things of market breadth. market breadth total view that combines insights from two composites, Nasdaq NYSE and four major indices, S&P 1500, 500, Nasdaq 100, DJI. Lot of insights but presented in a visual, easy to understand way once you start using these plots. Let's start with the yellow line. The most responsive of the market breadth MA calculations, percentage of stocks above 50 MA in aggregate for the two composites for major indices. Recovered nicely but nowhere close to the previous peak, also below the average line. Shows that though here the candle charts are for SPY, though SPY made new all-time high, the yellow line is showing clear weakness. It is currently at around 60% level, say 57% level. Whereas the white and orange lines, they are slower. They are still hovering near 80% level. For Q trading purposes, we use the yellow line more, and that is clearly showing the weakness, also a kind of divergence, and it is also forming lower high. If it tilts down from here, that will be a signal to look for short trades, because the yellow line, percentage of stocks above 50 MA, will create lower low, lower high, come down from a swing high. That will be a time to look for shorting opportunities if that happens. Other weaknesses? No, because there is no Hindenburg, no Phoenix, no distribution count also. What about 3-month new high low? Again in aggregate for the composites and major indices. Very bearish move again, followed by a strong bullish move, green dot. From this point we could start to buy stocks, and that would be very useful if you did that. The 3-month new high low is now reaching the extreme level. If we see a red dot, that will be a sign of weakness. If we see a green dot now, that will be a sign of irrational exuberance. But those are not there. It is bullish and not yet showing any weakness to start taking short trades, not from 3-month new high low angle. Difficult to short in this market. Is overbought from multiple angles. Again, which angles? Or there are concerns from multiple angles. From which angles? Let's go through them again. First is IWM and DIA are at resistance levels. Second, for technical market breadth daily interval, we see strong move up associated with strong bearish reversal. Third concern, more than 50% of stocks giving bullish signals are from price extreme high. Next concern, the yellow line, percentage of stocks above 50 MA, whether you look at total breadth or Nasdaq or NYSE, didn't reach the previous high, nowhere close to that. These are the concerns. No bearish signal yet, but these are concerns. Having said that, I mentioned that there are bullish opportunities, and let's now go through some of them. While going through the opportunities, I will add one more comment. You know that probably. Why my success rate of the trades that I share publicly? That is quite high. What I mean by quite high, if I have to put a number to that, all I am expecting is at least 60% success rate, and there are some materials on my website sagarnandi.com that shows if you have consistent 60% success rate using stocks where the reward risk ratio is 1:1 or better, you make a very reasonable, and it can be very high return depending on your trading frequency on an annualized basis. So I'm expecting just 60% success rate, though the success rate actual is higher of the trades that I share publicly. And it's important. I shared them publicly before knowing the result. And that high success rate with reasonable reward risk ratio is due to the fact that I look at the market from different angles to make an idea that am I going to buy stocks or short stocks, and if I'm going to buy, then I look for industry strength, fundamental strength, technical strength, combine all the forces together, combine even seasonality. If bullish seasonality is there, this particular month is not bullish in terms of the market, neither is it bearish in terms of the market, not enough seasonality, so I'm not using seasonality now. Otherwise, I would combine even seasonality with market level picture, industry strength, fundamental strength, technical strength. That's why the success rate is high enough. And the trades I am going to discuss now have those components, all the forces aligned with them. Let's look at some of them. Some stock that I am not going to buy. Let's start with them. PBR. Very strong stock in terms of fundamentals. In recent weeks moved up strongly. Oil and gas or energy sector stock. Oil had been going up strongly. PBR also went up. And breakout traders might be excited when it broke out of the previous high. But I would be cautious because it was already overbought even in the weekly interval shown by these very useful dot indicators. All the dot indicators represent something, so I don't miss anything. It was showing that even on the weekly interval, PBR was overbought for 5 weeks. That was not the time to buy. In terms of weekly interval, this week would be the time to buy when it created a bullish shape, bullish color candle after displaying a doji or indecisive candle. Indecision followed by a bullish candle in terms of color shade, that would be the time to buy in Q technique, not now. Now it is overbought. We would happily book partial profit along the way and protect the remaining position. What else did I say? It has an indecisive shape candle now. From the previous peak, price dropped sharply. In the daily, importantly, it displayed a bearish headwind. Am I going to short? No, because there is trend line support. If on Friday price closed below the trend line support, I would not mind taking a low risk short trade, probably using options vertical, so I wouldn't have to put a stop. But it did not break the trend line support. If next week it breaks the trend line support, I may not mind taking a short trade, and because I will be looking for the short trade probably during the morning session, I would try to take it using intraday chart. Its fundamentals are not weak. That's why the stock went up strongly. Let's check that out. PBR. I'm using this program Q Vital. No data is stored on my computer. Everything is calculated in real time. And it can calculate fundamentals of any stock in the world. What do we see? In terms of fundamentals, I'm looking for either valuation or earnings growth. Some traders also look for revenue growth. I don't use revenue growth so much. I use either valuation or earnings growth. It has to be undervalued or high earnings growth for buying. In both terms, PBR is strong. So it is not a fundamentally weak stock. But sometimes I may not mind shorting. That is the one time shorting at the top that I am okay to ignore fundamentals. The stock came down on Friday. 80% of industry peers went up, but relatively was the industry strong on Friday. In itself, of course, the industry was strong. 80% of PR stocks went up, but was it relatively strong when you compare with other industries? Let's check that out from the sector industry rotation analysis tool. It was relatively strong as well. The score, relative score, in fact, went up. And if we look at the rotation table, it is actually looking strong. Therefore, when I complete this part of my analysis, 360 degrees analysis, I said I am okay to ignore the strong fundamentals if I am shorting the top, but I am not okay to ignore the industry strength. Therefore, I will not try to short PBR next week unless I see that the industry is also weakening, and I can find that from the real-time score that will come during the market hours. During real time, if I see the relative score weakened and if PBR comes below the trend line support, then I may look for a shorting opportunity using fine-tune intraday chart. But this was not so much looking for a short setup. As I mentioned, it may not be easy to look for short setups. It was more an example which stock I am not going to buy at present. I just extended that analysis to see if at all I am going to short, what are the conditions that need to be fulfilled, and I articulated them. Another stock that I am not going to buy is Nvidia. Very strong in recent weeks, and I covered Nvidia in the previous webinar also, and I showed it displayed an indecision at the top, bearish shape candle. Immediately after that, another indecision at the top and a bearish headwind. And I mentioned on this day, my last analysis was on this day, the cyan candle, bullish flow candle. I mentioned if price could go below the low of the bullish flow candle, that would mean price is coming down after displaying bearish headwind, then I would protect profit in Nvidia. There was no short setup. Price did not come below the bullish flow candle's low. Instead, it went up. And where did it go? It went to the watermark resistance that had the indecision at the top earlier, displayed the indecision at the top again, and bearish headwind again. If you looked at that, then on Friday you could use fine-tune chart to take a low risk short trade. On weekly daily interval, the intervals I use for swing trading, there was no short setup, but looking at the bearish headwind on Thursday at watermark resistance that had indecision at the top earlier, I could look for a short trade on Friday, not using daily interval but using fine-tune intraday or precision entry intraday chart, and that chart would be this one. 5-minute interval is what I use in the morning session. Already the bearish headwind came on Thursday, so I am looking for a short setup. The early range formed, and right on this candle we could short Nvidia at this price level, putting stop above early range high. The stop was not hit when price hit a major pivot level, this red pivot, and as you can see for precision entry intraday time frame, I'm using the zero lag pivot levels, zero lag trend lines lot more than lagging indicators, and I do use the stretch release indicator also for reversal trades for precision entry, but they are almost zero lag. You will see they change so fast, they are appropriate for intraday trading or precision entry trading. And in this case, the risk distance was covered when the major pivot support was hit, and we would exit at least partial position to make it a guaranteed risk-free trade. If you traded the short direction using stocks, then at the close of the day, you could close the stock position and with partial profit you could buy options, probably options verticals with part of the profit. So you would remain in a bearish position but with profit. Your own money would be back in your account. That is the way, using the analysis I shared earlier on Nvidia, you could take a profitable short trade on Friday. We are at 1 hour point. I will now go through few stocks quickly. I listed many stocks, but I wouldn't go through all of them. Let's look at some of the possible buy candidates at low risk point. KC, Kingsoft Cloud. Two successive indecision at the bottom in weekly, one bull release in weekly. In daily, it penetrated below previous support. The traffic candle color was red, then it turned yellow in daily. Indecision at the bottom, then traffic light candle color turned green. If price can go above the watermark support, it will create a false downside breakout that may give a low risk buying opportunity. If you see the last high volume day, extreme high volume day in fact, was bullish, and if you look back, there was no so high volume day in the recent past. How is its fundamentals? Let's find out. Overvalued but high earnings growth with a short squeeze potential, one star candidate that allows us to buy. And why I showed this example, this is an example of a stock that is at a very low risk buy point, has earnings growth related to cloud computing. That may be an interesting industry to take a long trade. Has not given a buy setup yet, but may be worth tracking. Baba, let's look at this. If you looked at the stock on Friday, near the open, it gave a gap long buy setup. And when a gap long buy setup is associated with a trend line breakout in daily, that is even more powerful. When the gap long setup is associated also with a weekly trend line resistance breakout, that is even more powerful. What do we see in the alternate signals? 1 dot, 2 dot, 3 dot. 3 kahuna in a row. What else do we see? 3 pocket pivot in a row. 1 Mobo breakout. On Friday, the biggest up move in 1 month. Would I buy at Friday's close? No, but I would buy near Friday's open. It gave a gap long setup plus a breakout setup, and it is at a low price level. The weekly is creating nice double bottom, and on top of that creating false downside breakout and a trend line resistance breakout, weekly daily worth. These are strong setups. When a stock is at a support and breaking out of resistance in multiple time frames, those are strong setups. If we look at the intraday fine-tune chart, gap up open, early range high, early range low formed, 5-minute precision entry chart. At this point would be our entry point. Stop would be just below early range low that was never hit. At the high of the day, much more than risk distance was covered. So once again, we could book profit, partial or full, and if we traded using stock, we could use part of the profit to buy options to make it a guaranteed risk-free trade as a whole. I wouldn't buy on Friday's close, but I could buy near Friday's open using fine-tune chart. And how would I find it? I would find it from Sonar if I used TradeStation. It had a gap open and then it also had a breakout, and both of these signals came right after the open. So I would be able to take the long position using early range breakout technique. How is Baba's fundamentals? Three-star candidate. The ones I love to buy, both undervalued with earnings growth and revenue growth, great earnings quality, steadily going up. Great fundamentals could be bought on Friday near the open. Let's look at some other stocks that could be bought near the close. RCL. It has a pullback setup from a trendline support in daily. Weekly trendline support. These are very powerful support areas. Both weekly and daily memory trendline supports, powerful support areas. Plus it has a pullback long setup, bullish flow, high volume, pocket pivot, MOBO breakout, PSAR reversal. Many bullish signals, and again you could find them if you are using Q Global on MetaStock. You could find them from Finder. If you are using Q Elite on TradeStation, you could find them from Sonar or Radar. Breakout, pocket pivot, Kahuna. Sorry, that was Baba, right? Yes, Baba. You could find it from Sonar or Finder. Few more stocks. I know I am beyond 1 hour, but it is useful to reinforce the statement I made earlier. Market level is overbought, but individual stock level, you have some very strong fundamental stocks giving low risk buy point. RCL, oh, by the way, sorry, I was looking at RCL. RCL, I mixed up with Baba and RCL. RCL, if you used Sonar, we had a bullish flow, pullback setup, pocket pivot, MOBO breakout. RCL's fundamentals are not strong. It's a cruise line operator, and we expect the fundamentals not to be strong, but they started the first cruise, I think, last week in the USA, I think from Florida, the first cruise after this pandemic. That may be a reason to look for a buy setup, and it has excellent support in weekly, daily both. Next possible low risk buy opportunity, Sono, audio video equipment, consumer electronics company. It has a nice breakout from many trendline resistances after finding support. Again, stock going up from support and breaking resistance. That's a powerful setup. I wouldn't buy at Friday's close because of the upper tail. If you notice the breakout earlier, you could buy using fine-tune chart. Now, if you see it going up next week, you could look for buy setup on Monday, for example, using fine-tune chart. How is its fundamentals? Valuation not good, but that's fine. Strong earnings growth, strong revenue growth, short squeeze potential, great earnings quality. So 1 star fundamental buying candidate. Low risk buy point. Upper tail would stop me from buying at Friday's close. Next week if it goes up, maybe a buy. Again a low risk buy. Credit Suisse. I took a long position in this stock. I shared it on the forum also, and let's look at the forum post. That will show you exactly what I looked at when I shared it, not after the result. I don't like to share. I always have doubt about sharing after knowing the result and showing how the signals work, whether Q systems or any other system. Let's look at the post on Credit Suisse. I shared it on Friday in the morning session, see 10:26 a.m. and it took me a while to post it, so I identified it soon after the market open. These are the snapshots I shared, 360 degrees analysis. The banking industry was gaining strength that allowed me to buy. Credit Suisse is actually a Swiss company. For fundamental analysis, instead of using the US ticker symbol CS, I used the Swiss ticker symbol, and this is a Swiss stock symbol, same company, and I can do that because Q Vital, like all other Q systems, Q Vital, Edge, Global, seasonality, everything can be used not only in the USA market but for global markets. I used that facility to my advantage. That is more meaningful. I could do a proper fundamental analysis in the country of its actual place. So Credit Suisse, the ticker symbol in Switzerland is CSGN, undervalued with earnings growth, steadily going up. That's a 3-star buying candidate. And when I shared it, I saw that nothing to boast about seasonality. Seasonality is nowhere close to 80%, neither in June nor in July, but it's just the seasonality improved from June to July. We are already nearing end of June. So if at all we have to read anything from seasonality, it is bullish. But I will not use seasonality as a deciding factor in this case. For that, seasonality has to be at least 80%, which is not true. If at all we have to read anything, it is bullish. Now the technical charts, and when I shared it in the morning session, again, that very powerful pattern, breaking out from weekly trend line, breaking out from daily trend line, after finding weekly trend line support, after finding daily trend line support. The breakout in fact happened on Thursday. I wouldn't buy at Thursday's close because it closed just above the trend line resistance. Then I kept an eye on Friday near the open. It was nicely going up and I took a long position right at that time. Other than the very strong pattern, finding support, breakout of resistance in multiple time frame, weekly, daily, very powerful pattern. On top of that, we had bullish flow on Thursday. We also had biggest up move in 1 month, always a powerful signal. After a stock comes down, gives a biggest up move of 1 month. Sometimes we find that biggest up move in 3 months also. Those are powerful signals. In fact, the previous biggest up move in 3 months, and I often say that may not be a sign of exhaustion when the stock is at a low price level and it gives biggest up move in 3 months. That may be a sign of bullishness, and that indeed came true. It created a base, looks like going up after breaking trendline resistance, and we also had a signal for possible reversal from the bullish headwind earlier. I didn't buy at that time. I took a long position on Friday near the market open, and that is when I shared it. Great fundamentals, 3-star fundamentals, strengthening industry. And if you look at Friday's close, it closed higher. I already have a profit in the position, small profit, but the pattern is looking very weak. Again, a testament to the statement I made earlier that though the market is overbought, there are strong fundamental stocks that we may buy at low price point, low risk level, more importantly. Not so important low price level, more important low risk level, narrow stop loss, and we are able to do that because of industry rotation. Healthcare stocks, I am accumulating them in, and I am mentioning that publicly several times. Accumulating healthcare stocks that are strong in terms of fundamentals, buying them at low price point. Totally opposite to breakout setup, and QDEL is one of them again. Very bullish pattern in weekly, creating a saucer, created a bottom, gradually creating a base, and seems like becoming more and more bullish. In fact, this week's candle is the most bullish it had been since this point. This was a bullish shape, bullish color candle. For all these weeks in the middle, there was never such a bullish looking candle in the weekly like this week. Most bullish in a long time. In the daily, still inside a range. One may wait for a range breakout from this trend line resistance. But I took an early position looking at the weekly pattern, high volume, Kahuna, pocket pivot. Biggest up move in a week for 3 days in a row. Looking at these signals, I took a long position already. Let's look at its fundamentals. Remember, I accumulating strong fundamental healthcare stocks. And therefore, it goes without saying its fundamentals will be great. Yes, it is. Undervalued stock with great earnings growth, great revenue growth, fantastic earnings quality, short squeeze potential. QDEL, another stock I bought. Now two more stocks. Beautiful, isn't it? How easy it is using the colorful signals to look for stock setups. USWS, energy sector stock, fell down for some reason sharply. This was earnings week, tried to go up but came down. And again, if you look back, what I mentioned just now, if we look back for a long time, we didn't have such a bullish shape, bullish color weekly candle. In fact, the last time we had it was here. After that, price went up, but even those candles had upper tail. Price sharply came down, tried to go up, and this is the most bullish shape, bullish color candle in a long time. Incidentally, it happened at the same level as the prior candle. What pattern we see? Creating lower high and trying to go up. Creating, sorry, not lower, creating higher low and trying to go up with bullish shape, bullish color. In the daily, it still has trend line resistance. One may wait for the next trend line resistance to be broken. One is already broken. I took an early position using Friday's gap up open. We have a pocket pivot on Friday, Mobo breakout on Thursday. Another pocket pivot, I think few days earlier. How is its fundamentals? USWS. As you can guess, remember for shorting at the top, I may ignore fundamentals. For buying, I don't do. So it should be quite strong. Yes, 3-star candidate, great valuation, high earnings growth, short squeeze potential. I have a position in this stock. Very low price stock, by the way. I have a list of low price stocks also. It is there in Q Vital. Sometimes I look for trades from that list. It is one of those stocks, low price stocks, but strong fundamentals. By the way, such low price stocks can be very volatile. So when I buy, if I buy such low price stocks, I usually control my size even better. Do not buy full size as I would do in a stock like Baba or Credit Suisse. Take Usually I take a smaller position to lower my risk because the low price stocks can be very volatile. The last one of today, BFLY, had a beautiful double bottom in weekly. Price went up. Bullish flow is remaining, though the shape is indecisive. Daily created a very bullish shape, bullish color candle. Bullish flow, high volume, alternate signals, pocket pivot, MOBO breakout. A proper way or another way could be to wait for the stock to break out of this range. Maybe too late if the breakout happens with a gap up or something like that, or with a strong bullish move, as is often the case when a stock moves out of a range that is forming for several weeks now. So you may wait for a range breakout, or you may look to buy at the lower edge of the range. So I try to buy at the lower edge of the range. Both are feasible techniques. One is wait for a range breakout, or even better, wait for a pullback after the range breakout. Sometimes those pullbacks may not materialize, so you might buy partial position at a range breakout, add to the position. If it pulls back, goes up again. Or it is also a viable technique to try to buy at the lower edge of a range, as I did in this stock, BFLY, again a healthcare stock, and therefore I think fundamentals would be strong. Again a healthcare stock at a low price level, looking bullish, and it should be BFLY.K. Okay, not enough information about the fundamentals. So in that case, I might have looked at the company in more detail, what it does, etc., and it looked interesting. Sometimes I may buy a stock based on the technology of the product it has. Take a chance, not that I'm an expert in all the technologies, all the products that these fantastic US companies or global companies create, but by studying the stock in Icon Zenith, I have a fair enough idea to see whether I can take a risk, small risk in the trade. And it is steadily going up, has a short squeeze potential. Butterfly Network, digital health company. I did take a small position in this also. Again, a alternative entry would be after the range breakout. What I used is buy at the lower edge of the range, so my stop is very narrow. If I change it to monthly interval, yes, this is what I was expecting. Why did I buy? I was thinking, why did I buy? Because the fundamentals are not looking so great. Yes, it's healthcare stock, but I am not usually one who ignores the fundamentals when buying. So why did I buy? I was thinking. So I changed it to monthly interval, and the reason is clear. It is a recent IPO, and the price is very near the lowest price it had been to after IPO. So strong IPOs or recent IPOs giving a bullish setup looks like a promising technology. In that case, I may ignore fundamentals, and that is what I did. I have a long position in BFLY also. As you can see, the market level is overbought. I am cautious not to buy stock at the very high. In fact, you could short Nvidia based on my previous webinar analysis, but that would be using fine-tuned chart. Using daily, weekly swing trading technique, it may not be easy to find shorting ideas right now. May change next week, but that's a big may. It hasn't changed. Right now it is bullish and I'm looking for buy setups more, but looking for them in either recent IPOs like BFLY or strong fundamental stocks like Credit Suisse, QDEL, and buying them with narrow stop loss. What does it show? It shows that whatever be the market condition, using these 100% real-time tools and the technique is as important, probably even more important than the tools. You might substitute the tools if you find other tools that are 100% real time to do the same, but the technique may be the same. What is the technique? Very simple. Find strong fundamental stocks at a low risk buy point in strong industries and keep buying them. So long as you keep your risk small, manage your size, as I say, it's difficult to lose money in the market. If you keep on trading like that, don't have to probably think about the profit. Just think about the technique. So long as you are disciplined in the technique, and I repeat again, it's difficult to lose money in the market. I have yet to see a person who followed this technique. Whatever tool you use, of course I use Q tools, but whatever be the tools you use, difficult to lose money if you follow this technique with discipline. It can be top down, can be bottom up, can be lateral, can be fundamental first, can be even seasonality first, though that's not my choice. Whatever it first that you look at, when you combine all the forces, I repeat again, it's difficult to lose money in the market. With that, let me end today's session. Thanks a lot for attending. I look forward to seeing you in my next session, which will most likely be on Wednesday, 8 a.m. Eastern Standard Time. Have a great weekend. Keep safe and trade profitably. No reason not to do that. Thank you.